The real truth about trading success is that a retail trader should not focus on your intelligence or indicators or speed. Mostly it's about alignment between your age, your cash flow, your responsibilities, the psychology you follow, the ability to read the market structure. The truth is, many traders they actually fail because they trade like a 45 years old person if they are 23 years old, and when they are actually 45 years old they trade like a 23 years old person. Hi guys, welcome back to another video. In this video I'm going to talk about how to trade as per your age. I'll be very frank, in this video series some people might find it hurtful or some people's opinions might change about trading, but the truth is I'm here to tell you from my experience and my interaction with other traders the actual truth of how you should look at life as well as your trading journey in your age group. There's something we know, that markets will always reward cash flow aware traders, meaning you already know before you take a trade from where your money is coming, where you are expected to lose money, how much you're expected to lose. All your stop loss and risk is properly defined. Second, structure readers, meaning you can understand the market structure here, especially the corrective structures, where sometimes market goes completely dead and then it triggers a trending phase. Most important, that market does not reward prediction addicts, those who predict I feel market will go to so and so level or it will fall down to this level. I feel this feeling part, right? That is not part of any analysis, right? That is only luck and hope. We do not, market does not reward them. It is very important that you watch all the three parts because the youth will understand the challenges and targets of an older age group of traders. The older age group of traders, you must understand the trading mistakes what the younger age traders make, and you should not repeat it again. So let's get into the deep dive analysis of every age group. Let's start with the youth. Focusing on the age group of 20 to 30 years old, we know that this is your skill building phase. The current state of life, everyone knows you have a lot of energy, you are low in patience, minimal responsibilities. Usually, it's a simple living in a PG or in a hostel, or you're in your early marriage life. The truth is here that you have a lot of time in your hands. Maybe your cash flow or cash deposits might be little less, but you have enough time, and you have enough time to make growing income. I know that your desire in life is to make it fast. You don't want to struggle later in your life. This formula of make it fast is actually one of the major roadblocks in your journey. The trading maturity is usually very, very low. You have not seen so much of the life that you can understand every phase of it. Right now, the truth is your maturity in trading is very low. What I mean by this is usually the traders in this age group, they overestimate their skills after a few win streaks. Let's say 2 3 days you made profit, and now suddenly you think you know everything in trading. And the drawdown phases, when you know it is wrong, you have to stop. But there are youth which are literally immature. They keep trying the same and same things again. It repeats their mistakes, and one day they go out of balance. Talking about cash pool and expenses, the capital is low. Monthly expenses are actually manageable. It's not so much. The truth is, the biggest asset you have, like I mentioned earlier, is time and the learning capacity you can do with time. But the youth usually falls in a huge trap called the fast money mindset, the weekly expiry addiction for quick money, and also the all in one options trade. One big trade will change my life, or I can remove total expenses out of this one trade. If I had carried this trade today, I would have so much money. This success measurement in terms of rupees per day, but not in skill. This is the worst phase of your trading journey. Now, what you must do is avoid social media first, because comparing yourself to fake PNL, so far you have not yet matured in your trading journey, but constantly comparing it with the fake PNLs. thinking about consistency means daily profits, the confusion between luck and actually an edge in the market. All this is prone to happen in your early trading life. Skills mistakes which people make here is that ignoring market structure, jumping strategies every month, and not journaling or reviewing the process of trading you follow so far. Let's talk about what you should do in your 20s to 30s. You must first thing is avoid quick rich schemes. You must think about skill development, and in that skill development what must you learn? You must learn the difference between volatility expansion and volatility contraction. When the trends die slowly, why don't the time decay behave the same in a trending market and in the phase of a sideways market? What structures you must focus on? Learn basic wave theory, focus on the trending phase, which is called the impulse, and then second on the corrections. Identify the difference between price correction and time correction. Understand when the markets will chop you when you're an option buyer, when the markets will plan to kill the option buyers, when the markets will suddenly reward the option buyers, when the market shifts from a correction phase to a trending phase. Now, you have learned this market structure, you know what skills to focus on. How do you convert that into a trading setup? What are the strategies you must follow as per your age? Let's talk about the basic ones. You must focus on debit spreads, targeting your directional moves in the market. The truth is, they have defined risk, and whatever fee you pay to the market for learning, suppose you don't know the direction or you have made a mistake in direction, the risk is defined. You don't have to pay a huge loss in the market. And sometimes the market goes sideways. For that, you'll start learning a small quantity of iron condor strategies. This is something that will teach you how price behaves, how your theta behaves in markets when the markets are dead. The range behavior of price is something you must learn. That itself will give you a huge idea on when the market, when it turns towards a directional move, how to implement a strategy. When the market is dead sideways, you must learn the patience part as well. Now, talking about the mindset upgrade. Now, you have learned the skills, you've understood which market structure to focus on, you understood the strategies. The last part is your mindset upgrade. You must start measuring success in the terms of execution quality, your rule following ability and discipline. Last, drawdown control. When you make a mistake, take the loss and cut it off. Don't hold it for hope. Control your drawdowns. That is an extremely important skill you must learn in your journey early on. So throughout this video, I've been trying to tell you one very important fact. Stop trying to escape your current life circumstances through trading. Build a skill that compounds for decades. In the next video, we will decode the path of a 30 to 50 years old age group trader. This video is very, very important for the youth, especially because you will get a hint about how your trading life will be after 30. I'll see you in that video.